FA1 Part B. Recording and Accounting for Cash Transactions. Chapter 7. Recording Monies Received. The topics that this presentation will cover are 1. Controls over recording receipts. 2. Cash registers. 3. Cash received sheets, remittance lists. 4. Posting cash receipts to the general ledger. 1. The controls over the recording of receipts need to be as good as the controls over the receipt and banking of cash. When cash is received, it may be recorded on a cash register or in a cash receipt sheet, but for accounting purposes, cash is not received until it is entered into the cash book. The controls over the recording of receipts are segregation of duties, the fact that the person who receives the money is not the person who records it, and bank reconciliation, where you compare the cash book to the bank statement. 2. Cash registers, or tills, are a useful control over cash receipts. They are accurate, and can be used to collect different kinds of sales information. The cash book is not the first place that cash received is recorded. It may be practical to record receipts elsewhere, for example, the cash register, and summarize the receipts to record them in the cash book. When recording cash received by the cash register, the total of daily sales amount, that is recorded by the cash register, is used to check the amount of money in the cash register, and to record the receipts in the cash book. A cash register can only work as an effective control if proper security and control procedures are followed, and if the cash register is used properly. The access keys to the cash register should only be given to the appropriate members of staff. A spare set of access keys should be kept by the person of authority. Staff should be trained in the use of the cash register, and then observed for a period of time. The maximum amount of preset information should be programmed into the till. This will save time and reduce the risk of fraud. Periodic information that is produced by the till, for example, sales by clerk, should be analyzed by the manager or owner, and any differences or variation should be investigated. 3. Some small businesses don't have cash registers, but they still need to record the money they receive. They record the money received on a sheet of paper called a cash received sheet. For an example, and explanations of the parts of a cash received sheet, see page 156 to 157 of your interactive text study guide. 4. When posting cash receipts from the cash book to the general ledger, the following procedure needs to be followed. Step 1. Add up all the columns on the receipt side of the cash book. Step 2. Check that the totals of the analysis column, excluding the discount allowed column, add up to the total received column. Step 3. Identify the general ledger accounts which are going to be used and posted to, and mark against the cash book amounts. Step 4. Draw up a posting summary and post to the general ledger. Stop the lecture. Answer the question on page 157 and 158 of your interactive text study guide. For an example on posting to the general ledger from the cash book, see the example on page 159 to 161 of your interactive text study guide. Discount allowed and discount received appear in the cash book to explain why the whole amount was not paid or received. Stop the lecture. Answer the question on page 161 of your interactive text study guide. A computerized system for recording receipts follows the same principles as a manual system. In a computerized system, the cash book could be kept either as a spreadsheet or as a cash book software package that works with a computerized general ledger. Receipts from customers are posted directly to their individual account in the computerized receivable ledger. If the general ledger and the receivable ledger are interfaced, they are connected to each other, they update each other, and the posting and summary amounts are done automatically. If the general ledger and the receivable ledger are not interfaced, then the posting is inputted by the computer operator. Miscellaneous receipts, for example, sale of non-current assets, are not normally recorded in the receivable ledger. They are normally recorded directly in the cash book, and from there, they will be posted to the general ledger, either automatically or by manual entry. This is the end of Chapter 7. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part B, Chapter 7. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What is segregation of duties when dealing with cash receipts? Question 2. The cash book reflects the movement of notes and coins through the business. True or false? Question 3. Why is a discount allowed column required in the cash book? Question 4. Is it easier for the operator if the computerized receivables ledger and general ledger are interfaced? After doing the quick quiz, do the online questions for Part B, Chapter 7. Do the questions, until you achieve 80%. Replay the lecture as needed.